Stocks, also known as shares or equities, represent fractional ownership in a company. When you purchase a stock, you receive proof of ownership, traditionally in the form of a stock certificate, although most are digital today. As a shareholder, you gain certain rights, including the ability to vote at shareholder meetings, receive dividends, and benefit from capital appreciation if the company grows. Companies issue stocks to raise capital for various purposes. This funding can be used for expanding operations, developing new products, or paying off existing debt. Many companies enter the stock market through an initial public offering, or IPO. During an IPO, a company transitions from being privately held to publicly traded, allowing anyone to purchase shares. Stock exchanges are organized marketplaces where stocks are bought and sold. The most prominent exchanges include the New York Stock Exchange and NASDAQ in the United States. There are two main types of markets. The primary market is where companies first issue new stocks through IPOs. The secondary market is where investors trade existing shares among themselves. Stock prices are primarily determined by supply and demand. When more investors want to buy a stock than sell it, the price typically rises. Conversely, when more investors want to sell than buy, the price falls. Many factors influence stock prices, including company performance, industry trends, economic indicators, investor sentiment, and global events. Market indices track the performance of specific groups of stocks, providing a snapshot of market health. The S&P 500 tracks the performance of the 500 largest publicly traded companies in the United States. Market capitalization, often called market cap, represents the total value of a company's outstanding shares. It's calculated by multiplying the current stock price by the total number of shares outstanding. There are different types of stocks. Common stock gives shareholders voting rights at company meetings and the possibility of dividends, though these aren't guaranteed. Preferred stock typically doesn't include voting rights, but shareholders receive fixed dividend payments and have priority over common stockholders if the company is liquidated. Stocks can also be classified by investment characteristics. Growth stocks focus on capital appreciation, value stocks are considered undervalued, income stocks provide consistent dividends, and blue chip stocks come from established financially sound companies. Investors make money from stocks in two primary ways. First, through capital gains, which is the profit realized when selling a stock for more than the purchase price. Second, through dividends, which are distributions of company profits to shareholders. Dividends are typically paid quarterly and can be reinvested to purchase additional shares. The stock market exhibits volatility due to various interconnected factors. These include supply and demand dynamics, economic indicators, company performance, market sentiment, political events, and interest rates. Historical market data shows that crashes and recoveries are a natural part of market cycles. Understanding these patterns can help investors prepare for future volatility. Economic indicators provide crucial insights into market direction and stock performance. Key indicators include employment reports, which signal economic strength, inflation rates, which may lead to interest rate changes, GDP growth, measuring overall economic health, and consumer spending, which drives company revenues. Investors typically use two main approaches to analyze stocks: technical analysis and fundamental analysis. Technical analysis studies price movements and patterns using charts and indicators. It focuses on market psychology and is often used for short to medium-term trading decisions. Fundamental analysis evaluates a company's financial health, including revenues, expenses, and profitability. It also considers industry position and economic conditions for long-term investment decisions. Understanding market cycles helps investors identify which sectors may outperform during different economic phases. As we move through 2025, key trends to watch include AI and advanced technologies driving innovation, expected global economic growth with some regional variations, manufacturing recovery due to new policies, and the ongoing impact of inflation and interest rates. Blockchain technology continues to evolve as a significant market trend, with growing adoption across various industries. Key statistics show substantial growth in blockchain investment, with global spending reaching billions and significant job growth in the sector. Many banks are now experimenting with blockchain technology, and several countries are exploring official digital currencies. Expert opinions from leading financial institutions provide valuable insights for investors navigating the markets. BlackRock sees market and economic tailwinds to start the year, but warns that new policies around trade and immigration could be inflationary. JP Morgan Research expects robust global economic growth in 2025, with the exception of a sharp slowdown in China. Morningstar notes that value stocks significantly outperform growth, yet remain more attractive for long-term investors.